Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer in screen. Everything this video is general in nature, none are relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none are relied upon as any form of advice at all. It is just general in nature only. This will be my last video for 2022, and I therefore want to do a bit of a summary of where we're at. It has been an incredible year when you look at it. If you want to look at the ASX and the equities inside it, who would have thought that we're staring down the barrel of possibly actually finishing in the green? In fact, on a total returns basis, once you include your dividends, the ASX is up for 2022. At time of recording, it's 1.8%. It could be even more than that if things go the way that they are currently pointing out to. I also want to point out that it was clearly a thematic movement this year. Energy has been an incredible standout sector for 2022, and no surprises considering what's been going on in that space. The catch, as I've said before though, of the back half of the year is that the oil price has fallen about 36% from its peak, whereas the equities haven't followed suit at all. You then look at things like bulk commodities and what's been going on in that space. Also has had an incredible year for very good reasons. There's been a lot of driving forces around supply that has therefore pushed up price and therefore helped the overall numbers. The disappointments are fairly clearly obvious as well. It's been across things like industry, it's been across materials that are involved with construction. It's also around just general discretionary items that started to really ease at the back half of 2022. Will that hold into 2023? Possible. It's an interesting thing to see because that's all down to the environment around inflation and the environment around rates. What that means for 2023 is something that you need to watch very closely into that year. Finally, the last thought is this. The looking forward view of what is 2023, sector thematics are likely to be there again. There is no doubt there are people who are already starting to make the call on sectors that have done well in 22 will probably reverse in 2023. Sectors that seem unloved or sectors that don't actually believe in this current environment that they're going to survive may actually be the complete contrarian view. And that's why next year will be just as interesting as the year we've just experienced.